Yo, what's going on, MineDialogers, or Dialogers for short? It's your boy back once again, sharing info for you to comprehend. And before you know it, you'll start to ascend. So what's good, Dialogers? I just wanted to give you a quick follow-up in regard to, let me close this out real quick. I was just doing a quick paper trade to get some practice in and close that for now. I just want to give you a quick update on what happened with this trade earlier in SPY. So for newbies or novices or folks that are new to options trading, I might say a couple things depending on if you watch this video prior to the basics of options trading versus investing video that I'll be sharing with y'all. If you're seeing this first, there might be some concepts and terms and things that you may be unfamiliar with. So just keep that in mind as you watch the video. So I wanted to give you a follow up on the trade that I took this morning. So I did take a trade to go short or for puts to go down. That trade didn't work out. Right, so remember I told you before the video ended that I was probably going to get stopped out, but I just wanted to see if we were willing to do something worthwhile that I was watching. Specifically, I wanted to see, I'm on the 32 minute time frame. Let me go down on the 5 minute because that'll look a little bit more. And again, I apologize for all this stuff. When I'm live in the trade, I'm trying to assess different things in real time so that I can make the best decision on whether to cut the trade, to stay in, or just to be patient in general. And so these thick descending down to the right diagonally, right, parallel lines, orange lines that you see here, I was specifically watching that channel because I knew that was like the bigger important channel that I needed to reference. And so if you remember in the video, I indicated, I was like, if we pop back outside of that orange channel, then I'm probably going to get out. So I had to hop on a meeting for work. And so I just put my stop loss, and my stop loss ended up getting tagged probably on this pop out green candle here that closed above the discount level. And so what happened was, so before that even took place, they did like a last minute shakeout. This was like a manipulation shakeout in a way, because we came below this purple line here, right? And they kind of got support. It wasn't like the perfect hit, but they got support off the top channel of this smaller purple channel here. And so I should have knew once they popped out of that, went inside of this channel and came out, that they were on, I kind of suspected they were on shenanigans. But one of the key things that I highlighted for you is once I saw this, I kind of knew what time it was. And really, I should have, as soon as I saw this, I should have got out the trade, in all honesty. So I could have got out a little bit earlier, preserved a little bit of money, I guess, but it's okay. I got an entry of $69. The contract expired on Monday. It was for I believe it was the 632 or something put. So I ended up losing $19 because they ended up stopping me out, or once price actually stopped for them to execute my trade, it was $50 instead of $52, which was what I actually put my stop at. And in the trading world, they call that slippage, right? Because I put my stop at 52, but because price was going so fast, when the price actually stopped for a quick moment, it was at 50 or 51. And with commissions and all that stuff, once they sold me out, I ended up stopping out at 50 actually. So this was the real key right here. Let me see if I can make this a little bit bigger. Once I was able to see this, make that a different color. Once I was able to see that, that's what kind of made me see what was going on. And I was like, okay, we're probably going up. Because if you remember, I mentioned that we were kind of in like a head and shoulder type pattern, which is, let's see if I could, I'm going to just take all this stuff off. I want to take it off, but I don't. Let me see here. Let's take off the purple. I want to take a couple things off, and then I'll probably undo it for it to come back. But you kind of had like this head and shoulder pattern here, where, and it was also like a W pattern as well, right? So we had this like head and shoulder pattern here. Oopsie, my bad, y'all. I'll be forgetting I have to double click this thing to stop drawing the path. Let's do this again. Hopefully I can draw better this time. I'm trying to see, let's let's do it like this. I'm just trying to allow you to get the best visual of it. There we go. I think that's better. All right. You know what? Let's do this. My bad, y'all. I need to make this as clear because it's just too much going on, and I want you as the individual looking at this for it to be as clear as possible. So, let's do this again. So let's see here. So. Really like I mean, it really doesn't matter, you could like draw it. Let me see, I'm just trying to figure out how I can draw it as clean as possible for you all. Let's see here. Boom, boom. Because in all honesty, it's really like an inverse head and shoulder. I mean, depending on which way you look at it, right? So we can do, so like on a, let's see here, we can do this, right? We can say you have this. Boom, right? Where you have your head portion here, right? And you can think about like your arms in the air. So your hands here, right? And then you're like your shoulders will be here or here. It really doesn't matter, but the concept itself, because you know we can put a head here, right? And these could be your shoulders right here. So like for example, that could be your shoulders right there if you look at it like that, right? But it's not that type of head and shoulders because there's nothing to connect the head to. I mean, it looks better visually, but this type of head and shoulders would mean that price would be coming down, right? So it's really like an inverse head and shoulders where essentially the head is down here, right? And then, you know, your shoulders would be like right here. And then your arms are up there. You know, something like that. But nonetheless, it's inverse because it's set up in a way to go up. Or you could just think of it in like probably a little bit easier and simpler is like it's really just a W pattern. if we really want to be honest, right? So you could go from here to here to here to here, right? That's like the first leg up of the W, right? It just depends on how you want to draw it. But let me just reverse this because there's some key things I want to show y'all. Let me get all my stuff back. All right, so yeah, where these blue circles are, when I saw that, that was kind of my indication that puts weren't going to work out. And then we, because what happened was we popped up out of the channel, closed above the discount level, and then they manipulated down, got support off of the top of the channel where that orange line is, but also just beautifully into this bearish volume imbalance right here, like to the T. And look what happened after. That was essentially responsible. Like so in trading, these are some of the challenges that you face, right? That's why sometimes less noise is good. I just use channels and things because it kind of helps me frame out movements and things like that. So I had the reference of a framework of what I was looking for, right? I knew once we popped out outside up top of the orange like trend line up here, or top of the channel, that the trade was done. And then once we came and dipped back down into this bearish volume imbalance and popped up, you know, that's when things really were a wrap. So I had it framed out properly for the most part, but I could have got out probably a little bit quicker. Or I could have waited to enter the trade and let them get all their, all that BS out of their system and really look to see where the key, because if I would have saw this, I could have entered calls right here. You got the first nice leg up here, a little consolidation here, the next leg up over here, and look, they're like gone. Bombs over Baghdad, right? So, but this is what happens in trading. Not many traders will show you this. They're just going to post like all their wins and things like that, which is cool, right? We all want to just show that we win, but the reality is trading involves losses. I've seen the industry begin shifting where folks are being more honest and just showing when they sometimes get caught off sides, right? Because even when you have the best setups, at the end of the day, it's a probabilities game. And so sometimes they create a bunch of noise and you got to find where the proof is in the pudding or the fine details to see and frame out the structure of the trade to really see what they're trying to do. And sometimes you get it, sometimes you don't. So I was fine with the loss. Again, I didn't risk a lot, lost what, $19, so that's what, 7, 14, 21, so almost 30%, right? But I had 2 winning days and 1 losing day, so I'm 2 out of 3. You're talking about a 66% win rate. That's pretty decent. That's pretty decent in my eyes. So, and again, when I was able to see what I did, not necessarily did wrong, right? Because I managed the trade. I had my risk in place in terms of my stop loss, and I had an idea of where I wanted to exit the trade if a particular thing happened. And so it just didn't work out. So just wanted to give you that update on the trade. And right now we're flying all the way up here. Another thing that could have helped is measuring, I would say, let's see here. All right, let me take this off. So let me take the indicator off. So one of the things that could help, now we're looking at right here. This is where the manipulation was, and then this was this entry point right there. So let's see here. If we were to, let's say, measure the previous most important structure, which really lies right here, right? Let's take off the extension to the right. Let's make this lighter a little bit. So this is the most important structure for me that we could have measured that would have gave us some type of reference for what was to come, right? Because you have, if you notice, right, let's check this out. You have like a consolidation right here. Let's change this color. You have that consolidation there, and you also have another consolidation here, right? You have another consolidation there. And so if we were to measure this using the fib, right, we take the Fibonacci Retracement Tool and we start our measurement from this most significant swing low in this entire structure here, this fractal piece right here, to the highest point or swing high in that same fractal piece. Let's see what happens. Now we're measuring from bottom to top because we want to see which level we're going to get support at. It could be at this 38%, it could be at the halfway point of the range or the 50%, and it could be at the 62%, which is the last level that would hold us up if in fact we were truly going to continue up. Now if that level gets broken, then we would need to shift our bias. But as you can see, right, when we measure that range, look what happens after. So these are just some things that you can do after, you trade, or just when you're doing your analysis, right? We see that a manipulation can take place below the 62%, right? Meaning they close below here a couple times and then they pop back up. That's a manipulation, because remember what I said, it's the last level that's supposed to hold us up if in fact we're truly going to go up. So you can see here, if we started our measurement here and ended it here, right, we got your manipulation here. And then you could look in the past how price behaved previously. Respected it with just wicks, manipulated here, all those things took place. But look where, see, this is something I missed in terms of my analysis and what I should have done, because I could have done this. This happened yesterday. This is the structure from yesterday's price action. I could have measured that in advance, which I should have. And that would have gave me the reference I needed, right? Because what happened, look, towards the end of the market, we manipulated below, came up above, right? Then they started respecting the halfway point of the range, the 50%. They wicked into it here at 6 p.m. on Thursday. And after market, they wicked into it again, took out this low, so it went lower than this swing low. Did that at 4:20 a.m., right? And then wicked into the 50% again at 9:05 a.m. So now we're gearing up and getting ready for the market to open. And so we got to pay attention to these things. You have a 1 wick. So let's you have, let's move this now. You have like that yellow. So let's look at this. Now, mind you, this is the 50% or halfway point of the range. This could have been a lot easier in terms of analysis, right? If I would have measured that, this would have gave me what I needed, and I could have, allowed them to do all their BS, because we hit it once, hit it twice, hit it 3 times. That could have been the entry right there, right? They took you up for a moment and then they came back down, but it did not breach or get lower than the last time that they hit it, right? Once we did that, they respected the 50. And think about it. This was the manipulation when we had all that stuff on the charts. It looked like they had manipulated below, I believe, the channel or something like that, right? But the 50% on the Fibonacci retracement held it up. They went up. Now they respected this 38%, right? 38% right there. And then it was off from there. And look what happened as a result. Take off. So those are just some things you can do going forward in the future, right? And then you look on different time frames to see how things look, right? You still got a manipulation below the 62%. So got a manipulation below the 62. Here, let's go up to the 45. Let's see what that looks like. Still manipulating below it there. The 1 hour, still manipulation. Hour and a half, still manipulation. So you're getting manipulation all the way up. So this was unless you framed it out properly, this would have been a tough catch, because even on the 4 hour, it still looks like a manipulation below that range that we measured. Right, you only see something properly once we get on the daily, where you have this close above the daily. But look what they did to shake people out. They opened, sold it down here, but up all the way up here, closed all the way down here, gapped up, manipulated, boom, take off. So that is it, folks. Let me see how much time we got. About 9 minutes left. We're gonna keep it at that. So that's the follow-up analysis for that SPY trade that I took. Again, that resulted in a loss, but this is a part of the game, right? You get some, you miss others. But I would say out of the 3 days, I was able to get 2 out of 3 wins, and I'm happy with that. I'm content with that. So we keep pushing, we keep sharpening our swords, and we get better with time. We make sure our risk is proper. We improve and enhance our entry models and all that stuff. But the key is you have to frame out your trades properly. So the piece that I missed was utilizing a key instrument in the form of the Fibonacci Retracement Tool. It would have helped me tremendously in concert with the other things that I was using, and I would have known to take the move going up instead of trying to get in the move to go down. So just some things to remember. I appreciate y'all. Please remember, like, share, subscribe, comment. Let me know what you want to see next. This was this is the debrief of the actual live trading. I'm happy you all were able to see an actual live trade, the choppiness BS before the takeoff. You're rarely gonna get something like this where people will trade live and show you and be humble about the losses or when things don't work out, right? This is the real life here. This is what I want to exhibit and show you all about trading, not just the wins and the great times, but show you that there's times you gotta reassess, pull yourself back together, and then get out there and knock it out the park. So please donate to the channel if your heart leads you to do so. Cash App is MineDialogue, one word. That's $, MineDialogue. email if you want to tap in for a free private consultation. Email is MineDialogue, all one word, .business@gmail.com. I appreciate y'all, folks. I hope you have a great rest of the day on purpose. Enjoy your weekend, and we'll be back at it next time. Love.